TGIF. Welcome to the BullHorn. Howard Lindzen back on the West Coast. Thanks for joining me.
How are you, buddy?
I'm good. So we're going to talk today about the surging prices of various commodities and how some companies are able to seemingly pass these on to consumers, get away with it, and others not so much. Looking at the companies that aren't being able to, some of the apparel retailers are just getting their hands handed to them. Ralph Lauren, the Gap, cotton prices really hurting. Is that a trend you think continues?
No, commodity prices have these bust and boom cycles. You know, the governments. Let's take a step back and just look at the whole macro picture here and how retailers are affected. First of all, it's been a phenomenal run. Hedge funds. Nobody believed in the run the retailers would have coming out of the 2008 crisis. They've benefited from lower cost of ads across multiple networks, and they themselves have benefited from email and the social networks and all the tools that LinkedIn you see going public. These retailers have been using it on Facebook, etc., to sell new products at a much cheaper entry point. But government wants zero interest rates. They said it, they came out and said it again, and so you're going to get prices going up. And with prices going up and jobs kind of staying stagnant, that's the macro picture. Certain retailers just can't pass on those costs. Ralph Lauren obviously being one of them right now. But it's a very tricky market. Tiffany's doing extremely well. So again, you know, they're selling jewel diamonds, and diamonds have held their pricing very well, and the high-end market continues to buy Tiffany diamonds.
Is this a case where, when you think about it, it's the high end and maybe the low end, and it's the middle ground that gets squeezed? I mean, you look at something at the Gap or Ralph Lauren. You're talking about something that maybe $40, $50 purchase that costs you a little bit more. Maybe consumers scale back there, but something like jewelry for a special occasion, yeah, maybe they'll splurge. And then if you go even lower end, everyone talks about coffee prices and how expensive they are, but at the end of the day, if you're buying one cup of coffee from Starbucks, even as exorbitant as the prices are, you're talking about $5. So you see Starbucks and Folgers, which is owned by Smucker, Kraft and some of their coffee brands, they're all raising prices, and it looks like people are still buying.
Well, coffee's a different story. Coffee's an American, I don't know if you say a tradition, but we love our coffee.
Coffee's for closers, if you believe David Mamet.
Ambience for awake, coffee's for closers. Yes, but the difference is the Gap has been goofing for the last 6-7 years. Kids need skinny jeans. Kids need their Facebook. Kid needs T-shirts with cool stuff that says they hate their parents. If you can't get that stuff at the Gap, and you can get that stuff at Threadless or Busted Tees or wherever you're getting your T-shirts now that are similar to your friends. Starbucks, on the other hand, reinvested in their stores, reinvested in their equipment, reinvested in the look and feel of their stores and the brand itself, and they've got coffee, which is, a commodity underneath, but on top of it, with the service and the style, they can raise prices.